In case you didn't already know, Berkshire Hathaway put out its third quarter earnings report this past weekend, and Warren Buffett has raised his cash pile even more. It's now at $325 billion. He's freed up over $36 billion of cash, additional cash, in the last quarter. And so that's more as a percentage basis and more as a total basis than any time before. And so that accounts for over half of the marketable securities portfolio. Over the course of this year, he's reduced the holdings in several companies like Apple. Apple has been reduced by about half. He sold out all of Snowflake here recently. Capital One has been reduced by about 20%. And Bank of America, the most recently, he's reduced by 30% just in the third quarter. And hardly anything has been bought by Buffett recently. It seems that it looks like they only bought about $1.5 billion worth of securities. And the things that they bought include Occidental Petroleum and SiriusXM. He started a position in Ulta Beauty here recently. And of course, in the second quarter, he started buying Chubb. And so we know that Warren Buffett likes those insurance companies, so he was buying Chubb. And so right now, with a market capitalization of just less than $1 trillion, Berkshire Hathaway's wholly owned subsidiaries account for a little more than a third of the total portfolio. The cash accounts for right around a third. The marketable securities account for less than a third of the total market value of the entire company. And so Buffett, there's not a lot that he likes right now. What he does like in the past has been buying back his own shares in Berkshire Hathaway when he can't find anything else. But right now he doesn't even like Berkshire Hathaway. He's been buying typically when it's been trading around 1.2 times book value. And he's lessened that up a little bit in recent years. But with Berkshire Hathaway trading at about 1.6 times book value, he doesn't want to even be buying any Berkshire Hathaway stock right now. Now, in August, we got a chance to buy Berkshire Hathaway in one day on August 5th when we had the yen carry trade debacle, and Berkshire Hathaway sold off quite a bit. But since then, Berkshire Hathaway hasn't been off hardly at all, and so there hadn't been many chances to be able to buy the stock. So Berkshire Hathaway and Warren Buffett, they feel that the market is pretty expensive right now. And so when we look at the Buffett indicator measures the total market capitalization of all the stocks on the exchanges in the U.S. versus the GDP of the U.S. And so when we look at the Buffett indicator, it shows that we're very, very overvalued right now. We're more overvalued than we have been in a long, long time. In the past, when the Buffett indicator has shown that the market is this overvalued, we haven't had the best returns. We've run anywhere from the negative single digits to the low positive single digits as far as future returns are concerned. But the returns that we've seen based upon what we've had as far as the Buffett indicator in the last few years has been a little bit better than what you'd expect. And so a lot of people are expecting this going forward. And I would say the Buffett, based upon the amount of cash he's holding, doesn't expect those types of returns. I would suspect he's waiting for better prices to be able to buy. The government has shown that fiscal stimulus is a good way to keep the recession at bay. We spent over $7 trillion keeping the recession at bay over the last few years and keeping the market propped up. And the government has grown the economy by spending all that money by about $6.5 trillion. So I don't know about you, but spending $7 trillion to make $6.5 trillion, I don't see that as the very best investment. But when we look at things, we can note that even though Buffett thinks the market is overvalued, people who are traders or speculators can also say, well, this is the best time to be invested. When you look at the markets, some of the best months to be invested are October, November, December, January, March, and April. And when you bring February in there as well, that makes 6 good months in a row. And so this is this seasonal time to be invested heading into the Santa Claus rally. And so this Santa Claus rally is what a lot of people wait for. They want to be invested this time of year. But when we look at what Buffett's doing, he is not waiting for this time of year to be invested. He's not going to jump in and jump back out. If you have an IRA or something like that, you can try to time things. And studies have shown that being invested this time of the year and getting in when the moving averages cross over is a good thing to do, and getting out when the moving averages cross under is a good time to get out. And that's shown that you can get much better returns over time and miss a lot of the downturns. But from a tax standpoint, that doesn't work really well. And so you don't want to do this in a taxable account. And if you're managing the amount of money that Buffett's managing, it doesn't make any sense either. What Buffett is fond of saying is that he wants to be fearful when others are greedy and greedy when others are fearful. And he relates times like this kind of to being like Cinderella at the ball. You don't want to be standing around when everything turns back into pumpkins and mice, but we don't know when the clock's going to strike midnight. And so some of us may turn into pumpkins and mice if we're still invested and haven't freed up a little cash when the things go bad. So since you like these videos, please put your thumbs up, subscribe to the channel, share with your friends, and as always, stay thirsty for knowledge. And that's all we have for today.